Hello, guys. Hope I am not late. It's 10:03. Thank you very much, guys, for coming. As usual, we try to see um, the whole market, what's going on the market. We will try to see some stocks, and I will try to answer your questions as usual. So just bear with me 1 minute or two. So to begin with, we should just wait a little bit until the guys come, and then we can begin our discussion. As you can see, okay, there is one watching right now. I don't know who is he. Some they hide. So as I told you, I will be just waiting just a little bit, and then we can just begin our session. So we are still in what we call the correction, and as you can see, this week the stock market doesn't do that much good, and we will go through everything when just some people come. So we'll just be waiting just a little bit. So as I told you before, these 2 weeks or 3 weeks, the market is troubled. We are into a correction, and until now it is a correction. It is not what we call it is not what we call a sell-off, and we are waiting to see if this is a downtrend, yes or no. This is the most important thing we should try to see, because when I see the stocks, I find some other stocks in the market are strong in different sectors. So this correction doesn't affect everything in the market, and this is why it is so important. And that's why we try to oh, okay. So guys, Neil Bassin, you say hello Karim, how are you? Thank you very much, Neil Bassin, to come, and all the others who are here. 010 Ardam, hey Sir Karim, how are you today? Thank you very much, I am very fine. So what we are going to do today is, as always, we speak about the stock market in general, major indexes, and then we go to speak about some stocks that you can ask, and I will answer your questions as usual. So we have enough people to begin right now. Okay, so I don't want to begin with the stock market, because if I begin to speak about it after half an hour or 1 hour, some other guys come and they ask me about it, so I will do it the same. So the main thing I'm telling you is that the market is shaked these 2 or 3 weeks. Shaked, it means the stocks that are not strong will fall, and there are many stocks that I see they fell. Okay, they fell, it means they go down suddenly without any notice. So this what do they get? They get a pressure from short sellers. Understand that short sellers, especially those hedge funds and the big guys, they make big positions on some stocks, and they are pretty sure that these stocks should be going down. Okay, because maybe they study the fundamentals of the company and they say it's weak, or the earnings, we have a gap down and the earnings are weak, so they will take advantage of this and make a pressure on the stock to go down. That's why you see some stocks, they were going so good into 4 or 5 months, and now they head south. It means they are going down. And each week we have a new low. It means there is a downtrend. Okay, but understand that a correction, it is not a downtrend. Correction, it means 1 week or 2 or 3 the stocks go down because a lot of people sell, and I will tell you why the people sell at this moment. Because after 4 or 5 months, from 26 December 2018, so we are nearly 5 months. This 1 week, last 1 week or 2, understand the trend reaches the high of last year. And this is a psychological barrier. Psychological barrier, what does it mean? It means a lot of people think that the market will not cross the high of last year. Is that simple? Yes, it is simple. So, what do, these guys? Either hedge funds or mutual funds, or anyone who is in the market who owns those stocks. So, in order not to lose these 5 months profits, some people, they say, okay, I love Djellala, say hi. So what they say it's enough. We ride the uptrend for 5 months. We have made a lot of money. So let's get out and have our profits now. Okay? And this is what happened. And when there is a correction, a lot of people sell all the shares they own. Now, when short sellers, who are day traders, they see a lot of sell orders and they see stocks are going down, they jump, and each day they sell short these stocks. So that's why you see stocks are going down for 1 week or 2 weeks. But understand, that it is not all the stocks that are going down. There are some that are going down. Okay? Now, let's see. I love Djellala say the market's still in correction and telling us to buy Planet Fitness. Hey, I love Djellala. Listen to me. Go back to last week. What did I say about Planet Fitness? I have made the whole video, I don't know, 6 minutes or 9 minutes, explaining the missed opportunities. What did I say? I say Planet Fitness have been going for 2 years. I didn't say buy now. Who tells you to buy now? Please, I love Djellala. Do not lie on me. I don't like that. Go to my video. Last week you were here, and the other week. Go and check what did I say. I have made a video specifically for Planet Fitness and other stocks. I say people, they miss an opportunity for 2 years. If you miss the opportunity, why you buy now? You buy when it is Planet Fitness was $20. Why you come at $80 and you buy it? Okay? And you asked the second question, did Planet Fitness sponsors you? What? Sponsor me? Listen, I think today, I love Djellala, you are telling big lies on me. Okay? I don't like that. I don't sponsor anything. If I'm sponsoring everything, so all my videos about any stock that it is has a very long trend, and I say buy this stock because it's good. I don't say that. And anyone who is following me, he should know where to buy. We don't buy the highs. Okay? We don't buy the highs. So this is something bad. Okay, no problem. No problem. I love Djellala. But please, all of you guys, I have never said to someone buy something or sell something. I say if you want to buy or sell, you should learn how to trade. This is what I tell for my channel since 2011. You don't just listen to people and buy and sell because they told you. And I, in general, I don't say buy and sell. But there are ways when you buy and you sell. Okay? Right now, I have some stocks that are going up and we bought them and we are making money, although the market is going down. So it doesn't mean that the correction is here, so everything is collapsing. No. And for me, I'm trying to follow the general indexes. And I told you in one of the videos, and I always told you, that it is not all the stocks follow the major indexes. The major indexes are going down into a correction. It could be a downtrend next week or the other week. But I told you always there are other stocks that are going up. I will not show you these stocks here because I am not asking anyone to buy or to sell. So this is something that it is so important to understand about what I'm saying. We are just speaking about in general. When I give you examples, it is just examples of the past. I'm not giving you an example of now and I say, oh, after 2 years, this stock is $10, it becomes 100 in 2 years. I have never said that, and I will never ask you to buy something. You should be responsible for what you buy, what you sell. When you make money, you say, I made money. When you lose money, you said, I lost money. And this is the market. You should risk your money to make money or to lose money. Now, if you don't want to, you can buy bonds. Buy bonds, for example, and expect no loss forever. And Just take the 5 or 6 or 7% every year, and that's it. Okay? Some people, when they speak when they speak about stock good, and I will show you why it is good because of the past 2 years, but this is nearly the dead end. It will collapse at any time, because when the people they discover the stock, they discover it late. So instead of buying it 2 years ago, you buy it now, and this is a mistake. And I don't know which strategy you are following, but it's very hard. But any stock can go up again and it continues its trend. This no one knows. So if you buy a stock, in whatever reasons you have, you buy a stock, expect that either it continues to go up or it can collapse. That's why we put stop loss. That's why everything that we do has no guarantee. Okay? Why we don't have insurance in stock market? If I tell you why we don't have insurance in the stock market, because insurance cannot bear stock market, because stock market, it's a big game. You can lose a lot of money. You can lose even all your money. So insurance is based on probabilities that they will make money from some people or the majority of the people. That's why it is called insurance. But in the stock market, if you have, for example, $100,000 or 1 million, you put it in stocks. You go to insurance, any insurance in USA or outside USA, and you ask them, okay, I have $1 million in the stock market. Can I insure this? I pay you like an insurance, like you pay your insurance. And if I lose, you will pay me. Do you think that insurance will accept? Never, never, never. Stock market is a risky business. Anyone who doesn't like risk, he should never trade and he should never buy stocks. You should find a job. You work any kind of job. You get your money because you sell your time to the company, and they give you your worth of your time by hour or by salary. Okay? So this is what you like, so do a job. But in the stock market, when you bring money, understand that there is a risk. It's a game for the people who like risk. It's not a game for people who don't like risk. If you don't like risk, do not trade, do not invest in the stock market. If you want to make money without risk, it is not in the stock market. So this just to make people understand that you should be responsible for what you are doing in the stock market. Sometimes people, they get very, very enthusiastic and hopeful that they put 10,000, after 1 year or 2 or 3, it becomes 100,000 or $1 million, or as some claim. The stock market doesn't work like this. You put your money, you have risk. Either you make money or you lose money. That's it. There is no other thing you can expect. Hello, Daz. Thank you very much for coming. As usual, guys, I always, when I try to answer, I try to answer one by one. And please wait for me to answer you. And I will be going one by one. Okay? Now, Neil Bassain said, is Robinhood really commission free? Any experience with it? Okay. I have talked, I'm not talking about Robinhood, I'm talking about all brokers that have this idea that you don't pay commission. Now, I know the answer, but I will not tell you. Here is the deal. Ask yourself, try to search why they offer free commission. Okay, they offer free commission, it's okay. Now, ask yourself, how do they make their money? You are customer for them. You are not a customer for other broker. You are customer for this broker. He will give you commission free when you buy and you sell. Okay? The first thing you do is you see the bid and the ask, and you compare it with another broker. See if the bid and the ask are the same. If it is not the same, someone is giving you higher. For example, I will give you a simple example. Okay? A stock is $10. The ask is $10. It means what they ask you to pay. In one broker, it is $10. In the other broker, is $10.05. So here there is a problem. The other broker, he is asking you 5 cents more to market makers. But there is no commission. Okay? But there is no commission. But you should pay this 5 cents. Where the other guy who pay commission, he doesn't pay it because it's $10. Now, 5 cents. Okay? If you buy hundreds of shares, try to see how much money you spend more than a commission. You will find out that you are paying more, way more than this commission. So brokers are not stupid to give you something for free. If they give you something free from here, they take it from the other side. And that's why I hate them. I hate those brokers that say commission is free. Commission will never be free. It is free, but they will take you money from somewhere else. Now what I ask you is go and search online why they give you free commission. It is not because of competition between the brokers. No, this is stupid. Don't think like that. Ask yourself from where this broker will live, because broker is a business. The broker basic thing is 2 things: commission and fees from margin account, from something else. Okay, this is how the broker makes its money. Now, if they give you free commission, from where the broker will make money in order to survive, because it is a business. Now, if it is a business, doesn't make money, it gives you all free. How can they make business? Understand that a broker will pay the exchange to get the information of the bid and the ask and to let you buy and sell. These are, they should pay. The broker should pay the exchange to get this relation, to give you the information, the bid and the ask, and to let you buy and sell. So you understand? Now, please, who is the other guy who asked this question before we go? Please, Neil Bassain. A lot of people ask me about Robinhood many times ago, and I always say the same thing. Okay? Try to see if he has a bid and ask. Because some people, they told me before, they have only the ask. It's a problem. He should tell you the bid and ask. Because when you buy, you should know how much you sell in order to know the market broker how much they make. Okay? But it is a long search. Don't go to them, to Robinhood or to anyone else, and they say to them, oh, why you don't give? Oh, you say, yes, because you are, I love you. Okay? Let's talk feelings. Let's say I am the broker, okay? And you come to me, you are a customer, and you begin to trade, but you get a very large question. You say, oh, Karim, you are a broker, okay? And you are making money from your commission. But how come you tell me it's free? How? What did I say to you? Okay? What did I say to you? I love you. Okay? Guys, I love you. I give you commission free because I love you and I care about you. So commission is free. Okay. Can you swallow this lie? Can you swallow this lie? A big lie you swallow it like this? A broker in the stock market and he gives you something, or everything is free? Okay? How can he make his money? There is something he would take from you because it is you who pay. There is no one else. It is you. You are his customer. He will not take his money from somebody else because you are his customer and he gives you service. So hope Neil Bassain, hope you do some research and you can send me an email and we can discuss this into details. Because these brokers understand they make their money from you or through you. Okay? If there is no commission, there is something else. It is hidden? Yes, it is hidden. Do we know it? You can know it. You can discover it if you search. But in the stock market, they will not tell secrets. It's their business. And they show off that we are good people and we are making a church. We are making a church in the stock market and we are giving charity. You don't pay anything. Just come and make money and go to your home. That's it. We are the people of God. Okay? We are the people of God. Just everything is free. Now, okay. So Neil Bassain, please continue your search on Google and see the secrets why they give free commission. Now it is not from this broker only. There are a lot of brokers, they get this idea and it is an appealing idea now. Just come and trade without paying. Okay? That's it. Ugandan Knuckles. Hello, Karim. How are you? Thank you very much. I am very fine. Thank you. How long to hold stock to qualify for capital gain? Okay. Ugandan Knuckles. I will give you a rule that you should apply in your trading or investing, and and I will give you a rule. I will explain, at least for the other guys who don't know, who don't know something related to tax. Okay, if you make money. So I will just go to the explanation. Okay. So, do you remember when I told you before, you should have two brokers? Not two brokers, two accounts. Account 1. Okay. Account B. Now, why you should have two accounts? I will give you the thing. Account 1 is about trading. Now, trading, and the second one is about investing. Now, what is the difference? Why you put two accounts? Because tax, in matter of tax, they are different. Now, if you are trading, any profit that you make is an income. An income, what does it mean? It means what you make plus your job income will be together, and you have what we call the tax brackets. So whatever is your tax bracket, let's say it is 25%, or it is 30, or whatever, or 28, or whatever is your tax, you should pay. This money goes with your job, it becomes your income. So you are taxed higher. You are taxed higher. Okay? So, now how you are taxed higher? It is when we have less than a year trading or investment. Less than a year is the rule. It means if you hold a position less than a year, like trading, day trading, swing trading, whatever is trading, but the position is less than a year, you are taxed higher when you make money. Okay? Now let's go to the second one, account type, which is investing. Now, investing, it is what we call passive income. Passive income, what does it mean? It means if you hold, okay, a stock more than a year, and you sell it, so here the tax is less. You are taxed less, and even your dividend, they are taxed less. I think it's 15 or 16%. You see that? 15 or 16% compared here to 25 or 28 or 30%. You see that? You see the difference? So, here is the rule. More than a year, it's called investing, and you are taxed less. That's why I told you before, if you are going to do a portfolio of investing, you should better have an account by itself, because your broker, it will be your tax preparer, it will be very easy for him to check Thus, all your stocks have 1 year, 2 years, 3 years, 5 years, 6 years. Even if you sell, the tax will be less. So this is an advantage. And the IRS give you an advantage of this. But if you are trading, it's considered an income. If it is an income, it is like a job. It is like a job. So all your money is together, and then they tax you 25% or 20% or 30%, depending on how much money you have. You can check this, or you ask your tax preparer. He will tell you which bracket you are in this year or last year, because things change according to the money you made and according to tax bracket that you have or that you will be. Okay? So hope this explanation clarifies the point. And from now on, you should try not to mix the two. Do not mix investing with trading. You will just make trouble to yourself. Even if you know that you are investing for 3 stocks or 4 stocks for many years in your trading account. But this will make a problem to your tax preparer, because he will see all the stocks that you own, that you bought, that you sold, and he will see if they are taxed less or high. Okay? So let's go. Let's go to so Ugandan Knuckles. Hope you understand this thing very, very clearly, and in the future you try to avoid mixing things. Okay, you are investing in 5 stocks or 10 stocks. You have an investment. You are always putting money. You are buying more shares. You are buying more shares through the years. You see your income, your investment is becoming bigger and bigger and bigger. Okay? So let it be like that. Investment for 10 years, 20 years, 30 years, 40 years. Okay? Until you make a very big investing account. You can make dividend income, or what you call passive income from dividend. And you can make an extra income for you when you are more than 60 or 59 years, 6 months. When you are 60, you can make an income from them. Okay? So, hope Ugandan Knuckles got the idea. If you have more questions, you should ask. Okay? Raju Ahmed, hi Karim, how are you? Nas de la Noche, how are you? Hello everybody, bonsoir Karim. Comment allez-vous, monsieur? Très bien, très bien. Pablo Diaz Pulsio. Hi, how are you, Pablo? I lost in Orly and BLL. Okay. Let's go to Orly and BLL and see. So, let's see here. So, Pablo, could you tell me when did you buy Orly and BLL? Orly, it has a gap down. So, did you buy it before? Did you buy before the gap down or after? I will show you. Okay, look at that. Orly has been going up, okay, for so long, then it goes down, then we have a gap down. As you can see, I make it big so everybody see it. So there is a gap down. The stock was going like this, not doing anything, but then it continued to go down for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. 2 weeks. 2 weeks going down, and then it goes up again. Okay? Now, when did you buy this Orly? Is it before? Is it after? At least I will see what's the mistake that you have done. Okay? Now, let's go to BLL. BLL, it was going up. Let's take this thing. It was going up from 26 December. As I told you before, 5 months. 5 months. January, February, March, April, and May. Now, at the end of May, it goes down. So, when did you buy the stock? This is the main reason. When? Okay? So, hope you answer. At least I will give you some recommendations. And understand that in terms of probabilities, you can lose many stocks at the row. And this is normal in stock market. It is normal. Even if you lose 7 times, 10 times, 12 times, it is normal. Sometimes the market is not trending and you are searching for stocks you don't find. So you just buy and then you lose. You buy and then you lose. You buy and then you lose. But this is normal. It doesn't mean that each time you buy one, it goes up, the others go down, and you are happy. No. Sometimes we have successive losses. And sometimes we have successive winners. It happens sometimes depending on the mood of the market. If these stocks are following the market, are following the major market, it will happen like that. But there are two kind of stocks that don't follow the mood of the market. So I have explained many times this thing, and I have just made last week this, I think this week, I have made a video about that. Or last week. I say two kinds of stocks. They don't follow the indexes. For example, the indexes that are going right now, the major indexes, like the Dow Jones, S&P 500, Russell 2000, they are going down. Okay? But you find other stocks are going up. So what are these kind of stocks that can go up where the market is going down? So, IPOs, it means new stocks in the stock market. Sometimes they go opposite of the market because their momentum is different. Now, second thing is penny stocks. Some penny stocks, they go up at any time. They don't follow the market because they are manipulated. Because there is manipulation. It has nothing to do with the market. Okay? So, Lug Anu, how are you? Lug Anu, hope I pronounce your ID correctly. Duna, hello teacher. Hello Duna, how are you? Vivi, Bubble Tea, how are you? Hi, thank you very much for coming, all of you guys. Raju Ahmed said, market was good on Friday, but Apple going down. Yes. It can be going down because maybe they have short sellers. So let's because you talk about the market and you talk about Apple. So let's go and check what's going on in the market and Apple. Okay. So this is what I tell you last week. Do you remember? Do you remember, guys? Last week with the Dow Jones. So here we have 2 days, 3, 5. All these 5. What did I tell you? I tell you either the market will go up from this, which is Friday of last week, when we have done the here. When we have done the live session, I tell you either the market will go up or it will go down. So it did both of the thing. It go down, it go up, it go down, and then it go up. Okay? The market didn't reach the low that we speak on Monday, 13th of May. It goes down, it nearly touched it, but it goes up again. So we will never know. If it continues like this, we will never know where the market will be. So I will put the same thing. I will put it here. So I say, what did I say? Either the market continue to go up or it collapse and cross. If it cross, it will be a downtrend. It happens the same as this here. It goes down, it stops. So it goes down, it stops. It goes up, it goes up. It goes down and it stops. Then it goes up again. Hope it does the same as this, and the market will go up. Russell 2000 has crossed the thing down. It goes up again. So I told you always why Russell 2000 is always the extreme. The thing is about Russell 2000, these stocks are lighter than the big companies. So they can be moved very, very easily. That's why you see when they go down, they go too much. When they go up, they go too much. S&P 500, it's the same. It's the same. As I told you, it's the same as Dow Jones. Now, we take Apple. Apple has a gap down here. It goes up because this is a gap down. It's from 197 to 185. I don't know. I didn't check why there is this gap down, because the earnings, this is the earnings. For me, I sold it here at the beginning of the day. I sold it. I follow the market and I sold it. But it go down and there is a gap down. I don't know why there is a gap down. So there is a gap down. It goes up. It goes down. Goes up. Then it goes down. So here we are at the extreme. Either Apple collapse down more or it will go up again. So we will never know. So we hope things will be better next week. Okay? That's why I told you it's not always that stocks follow directly what the index is, because the index is the average of all the stocks in the index. For example, Apple is in the Dow Jones, but in the Dow Jones we have 30 stocks. If 17 or 20 stocks are up and few are down. So you will see that Dow Jones is up and Apple is down. Okay? So if you have bought, make sure next week, if things go down, just sell. Now, why I say sell? Because it might be going more and more down. Now, it might be going up, yes. But since we don't know, we should just wait. If you don't want to trouble, when you see there is no trend right now, you can sell and wait. Okay? Because big stocks like Facebook, like Apple, like Tesla, like the other stocks, they move so fast up or down. So understand, you should see your risk management and you should exit on time. Don't wait. Okay? So let's go and continue with Raju. Ahmed, continue. CMG is a short. VV Bubble Tea said CMG is a short. Yeah, it seems to me it has a gap down. Yes, we have seen this Chipotle. It has a very excellent trend from 380, 86, 85, 385, 84, or 405. It goes to 727. Now it has a gap down. A gap down 706. 667. Okay, and then it goes down more today. But the stock is so big. Okay, so if you are going to sell short, be careful of these big stocks. So here you see, from 713 it goes to 658. Wow. So $53 down. $53 down. That's so big. VV Bubble Tea since has gone hype. Yes. Look, Ano. You see that kind of language? It's a traditional Arabic language written in English alphabet. أهلا أستاذي، رانا نستناو ذكا في ولد جلال. هذه لازمنا نحكوا عليها مليح إن شاء الله. إيه معليش، أبعث لي بارك في الفيسبوك ورانا نتكلموا بعد. فيسبوك اكتب رحمن عبد الكريم وبعد تلقاني وبعد نتكلم. اكتب رحمن عبد الكريم في الفيسبوك، اديني وبعد ابعث لي في الماسنجر، اني بعثت لك الاسم. And then let's see more. Sorry guys, it's a traditional dialect Arabic thing. Hello wise man. Hello Karim and everybody. Thank you very much wise man for coming, and everybody else. Free trader, how are you? Thank you very, very much for coming. Let's see. Free Trader Donna, hi. Hello. Uganda Knuckles, thank you for a great explanation. Uganda Knuckles, you should try to do things right from the beginning. Don't mix things. If you are having a good and you want to invest in many companies, just search fundamentals, try to check their prices, competition. Think these companies, are they going to stay after 5 years or 10 years? Okay? Just think about it and just buy the stocks that you want and just leave them. Okay? And each quarter you can check what's going on, if there is some problem with the company, if the company is good, why it's going down, when it's going up. So this is for investing. For trading, you know, trading, when you trade, understand that you can have losses, you can have profits. If you have profits, you will be taxed as a regular income. And if you have losses, you can claim them as losses. And you can claim until $3,000 a year. Except when you make you as a day trader and you have a lot of money. For example, you have 50,000 or 20,000 or 100,000, you are doing day trading. If you lose money, everything that you lost, you can claim it. If you have a day trader status, it means you have like a business, and you should ask your CPA or your tax preparer how to make it. If you have a lot of money and you want to do day trading, but if you have just little money like 5,000, 10,000, it's not a big deal. It's not a big deal because it's not a big deal. You can claim until 3,000. Okay. Now, Fida Hashim, thank you very much, Fida, for coming. How are you, sir? Thank you very much. And thank you very much, all of you guys who have come to this live session. Please try to ask as many questions as you can. As I told you before, there are stocks that are not following the market. If the market is going down, you think that everything in the market is going down. This is not true. Okay? This is not true. If you search for today, you will find some stocks that are going up, and because short sellers are absent, or there are just few short sellers there, that's why Fida Hashim said, is 50k a lot of money? Now listen. When you speak about money, okay, it depends on each person income. If someone is having a small job, $50,000 is too much money for him. For him, it's too much money. For someone who has, for example, let's say he's a doctor, or he's an engineer, or he has a business, he could have half a million or 1 million account, and he is trading. So it depends. Okay? So it depends on your income. And the money, for someone it is too much. For some other people is too little. They can't trade. Some people, they can't trade with 50,000. What is this 50,000? Okay? 50,000. If you want to buy Amazon, which is 1,700. Okay? How much you need to buy 100 shares of Amazon? Okay? So understand that in order to buy 100 shares of Amazon, which is 1,700, how much you need money? You need $170,000 to buy 100 shares. So it's not a big deal. So people, they don't buy 100 shares of those who have money. They buy 1,000, 5,000, 10,000. Those big traders who have money. So understand that the money depends on your income. So what you see big, other people see small. So it depends on how much you make. Now, average in our group, I don't know. I have taught some people who have millions of dollars, and I have taught some people who have 5,000 or 10,000. So it depends. But majority of the people, they don't have money because they have small jobs. Understand, those people who invest, those people who become big traders, they want to make bigger things in order to make more money. Okay? So the first thing you should think about is to change your situation. For example, I give you an example. If someone is making $10, let's drink some coffee and I will show you this. At least you will understand, because some people, they have a flu idea about money. So I will explain. Now, here is two people. One is making $10 an hour. Someone is making $250K a year, like a doctor. Okay, so let's take this. Okay, let's make someone who is making $25K a year here. Now, the person who has $250K a year, if let's say he spent $150,000 a year, he can save, for example, $100,000, or he can pay $50,000 a year, okay, into an investment. Let's say he buys stocks without trading, okay, just an example. Let's say in stocks. Let's say 100,000. Now, he reached $1 million. Let's say in 10 years. 10 years. Now, I'm not saying the stocks go up or go down or dividend. No, I'm speaking just in general. Now, let's say in 10 years, he has $1 million and he gets 5% dividend. So he can get $50,000 a year from dividend. Okay? In 10 years, he can even stop his job in the future. If they put more, maybe he has his wife or she's working the same as him. Okay? He can make this easily. Now, someone who is $25,000 a year, now how much do you think he can save? Okay? Let's say $100 a month he saved. He will have $1,200. Okay? $1,200. $1,200 by 10, it will be $12,000. Let's say he put it in an investment. I'm not speaking about 401k. No, I'm speaking about just an investment. And he get 5%. Okay? So, if you compare this guy with $25,000 year, you compare him with this guy, 250 year, you see that in their lifetime, there is no comparison. You can't compare. That's why you should not stay the problem in your life. It is not the investment. It is you as a person. You are not making enough money to invest. I'm not saying to be like this, to be like 250k, but instead of forcing yourself to invest little, you try to find education, do education, and find a better job that it is making 50,000, for example. Now, if you make 50,000, you can save more and your life will be better after 10 or 20 years. And your investment go bigger and bigger and bigger and bigger. So the problem is not the invest itself. The problem is what you make. If you make little, you are poor. Your investment will be poor because you don't have money. And stop looking at those guys that with 1,000 you become a millionaire, or with 5,000 you will retire at 20 years or 30 years or 40 years. Okay, stop listening to these guys because they will ruin your life. Instead of doing better education, having better jobs, and then it will be easy. It will be very easy to plan for your investment, and you can put as much as money as you can. That's why the people who have better education are able to make better living and better investment than those who don't have. Okay? So this is just in general, guys, just to explain to you these things, because a lot of people, they struggle to keep the bad jobs, and they struggle to keep them. I don't know why. If you are making $10 an hour, what do you expect in the future? They give you $100 an hour after 5 years? They will never give it to you. That's why you should find better education, better jobs, better opportunities, do business, do anything that make your income more. When your income is more, all the opportunities open in your face. Okay? Because the people, you don't see opportunities because you don't have money. Okay? You don't have money. That's why you will never see opportunities in the market or anywhere else in real life, even in the business. You can't see things without being able, or you have money. And money, you should have better jobs. Everybody, all the people, when they begin good investment in the market or business or anything, they should have at least some money. And then they can speak about something else. Okay? Now, understand that Fida Hashim, I'm telling you the truth. There are some people in America here. Let's say he spent 50 years of his life getting $10 or 11 or 12, and he has the opportunity to go to education for 1 year or two, or he has the opportunity to find a job that it is 15 or 20, but he didn't want, he's scared. Okay? And because the people are scared, they don't risk. And if they don't risk, they will stay where they are. And this is a problem of all the poor in the world. They don't want to think. They want to get what they get, and they think that this is the dead end. And the problem, poverty is not the dead end. It is our thinking that makes us poor. If you change your thinking, your mindset, that's why a lot of people, you find them who are doing motivation videos, who are successful people. What they do, they tell you that you should think otherwise. You are poor because you choose this poor job. If you change your mind, you find a better job. Yes, now you don't have, but to change your mind that you should find a better job, a better opportunity. You go to education. You go to do something else. Why you stay with a job and you say this is a dead end? It's you who is the problem, not the money. The money is always there. The main thing is how to get this money. When you change your mind, you get this money. There are a lot of people who send me emails asking my help. He say, oh, I have $500. Where I invest it? They think that $500, it's a big money. And I was always astonished. I say to him, $500 is no money. Should find another job, make thousands of dollars a month, and then you can invest a lot of thousands of each year, and then you can make a lot of money. Okay? So this is just in general. And I know it's difficult, it's not easy, but the people who don't seek to change, they will stay where they are, and this is a fact about real life. Now, let's go to Wiseman, and he has some good information he wants to tell us. So let's read. Kareem, some stocks offer small dividend and growth, also kind of like hybrid. Are the rich interested in these stocks at all, or do they only deal with high dividend paying stocks? Listen, I will tell you something about investing. Most of the people first, they think about the stability of the company first, and then they think about dividend. Now, when you say high dividend paying, no, the people, the big investors, they don't go to high dividend paying stocks, because those who give high, you find that the stocks are going down. It means the more they give you, the more the stock go down. So instead of making money of dividend, you are losing money of your principal. I give you an example. If a stock is $100, it gives you 10%. 10%, it means $10. Next day, you will see your stock is $90. So $10 is taken from the dividend. From 100, it becomes 90. But the stock doesn't stay at 90 because of the short sellers. It go to 80, it go to 70. And then you get $10, you get 10% from 70. So you get $7. So I will show you this, because maybe a lot of people, they don't understand how this dividend works. No. Let's see the explanation. Please let me give you an example about you have $100 stock. Let's say you have 100 shares only, just to make it simple. Now, the first dividend or the yearly dividend, okay, I speak about the year, they give you 10%, which is a high dividend. Now, when they give you 10%, the stock will become $90. Then the stock, after a few months, because of short sellers, they go down. They go to $70. Now they give you 10%. How much they take? They take $7. So the stock next day, it becomes $63. And so on. So here, you have a bad investment. Why? Because your principal was 100, now it is 63. So you have lost $37. Here you get 70. You got lost $37 lost. But how much you make? You make $10 here, 10% from 100, it is $10 plus. And you make here 10% of 70 is $3. So you have made $13 from dividend, and you have lost 37 from the price. So, are you making money? Yes or no? No, you are losing money. If you take 13 from 37, 4, you have lost minus $24 for each share you own. It means you have lost $2,400 a year, for example. Now, you think that you are getting dividend 10%. You are thinking that you are making money. But in real, you are losing money. You have lost $2,400 for this year, from 100 to $63. So, what the people are doing, okay? What the good investors, what they are doing, okay? Now they should see stable companies, okay, that their earnings is always increasing, okay. So you find these companies most of the time, the companies, if you compare them from 2000, for example, 10 to 2019, you find that this company is going up like this. Always, you see that there is the capital that you put here is always increasing through years. So you are making money from your principal. This is one. Second, plus all the things that are given to you, plus this is the dividend. So you are making money from the principal and from the dividend. This is the good investors, what they do. So in order to be a good investor, you should think that companies should grow into principal and dividend also, not just dividend. Okay? If the dividend goes down, you lose everything, as I showed you just in a moment. Okay? So this is just an example for you guys. And most of the time, if I tell you this, you should see it. Go put, for example, the highest dividend yield in stocks. Go to Google and search. Believe it or not, you find the chart going down. Always, most of the time, it's going down. If you lose your principal, what do you do with the dividend? Okay? The most important thing that big investors are thinking is not to lose your principal. The principal should be always growing. Although it is growing like 5%, 10%, 20% according to the market, but still, in the future, they will be making money. And if they have big money, they will make a nice passive income. And this is the goal of the investors, is to get dividend while their investment is growing up, not going down. If you are in a bad companies, one day they go bankrupt and you lose everything that you have. That's why good investors are looking for companies that are stable and that they have proof that each year they are making money. If you suspect that your company is not making enough money and the trend is going down and the competitors are going up, what does it mean? It means that your company is doing so bad. Okay? Please give me just a minute. I will bring a cup of coffee. So please ask your questions. I will be coming back in a minute. Hello guys again. So I'm still reading your questions. So to continue and finish answering wise man question, you say, are the rich interested in these stocks, which is hybrid stocks? Most of these stocks, which are what you call hybrid, they are small businesses not making enough money, and if they want to stay in the stock market, they give a lot of dividend, but their stock is going down, so in the future they will be worthless. So for you guys, if you are investing for the long run, try just to see stocks that are normal. Normal, it means they are strong companies in the market. In many years, they are going up. This is what I like. Okay? They are growing up. It doesn't, they don't grow up each year or each month or each week. But through the years, they are growing up. They are giving more dividend. Their earnings is increasing. They compete well with other companies. Okay? That's why big companies buy small companies. Small companies, they can't make it, So they are sold. Either with a profit or without profit, it means they are sold. I see, for example, Rite Aid is sold to Walgreens, for example. Before I give you my experiment, one time I get interested in Rite Aid. I don't know even if it is in stock market right now. Yes. Rite Aid, I see it here. Okay. So let's show you Rite Aid. Now, Rite Aid, one time, I don't know which time here, I think when it was, I don't know, maybe here or here, I get interested, I say Rite Aid, it's a drug company, and it is in retail, and it is only not expensive, it can go into a long investment. And I see a lot of Rite Aid stores open in the city, and I think it is a good investment. I didn't buy, but I went and I began to search if, because this company was going down, I see why this company is making more stores in the city and their stock is going down. For me, I know when the stock is going down and all the other companies are going up, it means that the company has a problem. And later, guys, I discover that Rite Aid Corporation, okay, I discover, guys, that Rite Aid has a lot of debt, a lot of loans that she can't pay. She can't pay. They make money, but they can't pay because the loans are too much. I think now, Rite Aid, I think it is sold to Walgreens. Because I see Walgreens taking over Rite Aid. A big fish eats a small fish. That is stock market. And so, what did I do? Did I buy? No. I didn't buy. Why? Because a company that has a lot of debts, it's like someone who has a lot of diseases, big diseases. Okay? It's a bad investment. So when you invest, try to see the cash flow, try to see the debt, try to see what the analysts say about this company, just in general, okay? I'm not saying you believe what they say, but analysts, most of the time when they speak, they will show you points of this company. You can check them yourself. And you can compare. You can compare companies in the same industry. Okay? So don't just jump and buy. Don't just jump and buy because it has a small price. Small price, it doesn't mean that it is good. Small price in general means that the company is small. Especially when the company was big and now it is small, like Rite Aid, like Giuseppini, like Sears. All these companies, they were great years ago. I have been trading them so much. Giuseppini, Sears. I like Sears because it goes so fast. The stock moves $3, $5 a day, up and down. It was a great stock for trading. But it collapsed from 195. Now it is, I don't know, some cents, or it collapsed everything. So let's go to questions. Okay. Wiseman said, so anything over 5% dividend is too much risk for the rich? No, listen, I'm not saying it is good or bad. But what I am saying is that stocks that give too much dividend, they are not good. Because the capitalization of the company becomes smaller and smaller and smaller. Try to think about companies that they grow their principal. It means the price grow. For example, you take a company in any industry. It was 100. After 5 years, it is 200. It's okay. It's good. The company is growing. It gives 5% or 2% or 7%. It's okay. Because this company is growing. There is no risk of long investment. But if you see a company that it is losing money, are you going, because it gives 10% or 12% or 15%, are you going to invest in something that it is losing money? Because your principal, if you lose your principal, you lose your investment. Because why some people, they like bonds, they don't like stocks? Because they don't want much risk. He put a bond giving 5% or 7% or 2% or 7% or whatever percent, and he says, okay, I am always making money, although little, but I am compounding my money. They don't like risk. But in the stock market, people who like stocks, because when you risk, and most of the time long investments bring more money than bonds and then gold. That's why people, they like to risk their money. Think about Warren Buffett. In 2008, he lost in Berkshire Hathaway. He lost 50%. His stock was 100, I think, 95. It goes to 85,000 a share. He lost half of his investment. But understand, he knows that the market will recover back in a few years. He knows the market. This is how the market is made. But he will not choose bad companies. Because if he for example, if he bought Sears, if he bought Giuseppini, if he bought, for example, Rite Aid, he will lose all his money. Why? Because these are bad investments. And when you see a lot of debts, try to stay away from companies that have problems with money. Okay? And these companies will collapse one day. That's why the people, they don't want to do that. Okay. So guys, let's continue question by question. I don't want to go over some other questions. Fida Hashim, what do you think about cannabis stock? You know, in America, it's not like in Canada. In Canada, cannabis is legalized in all Canada. Here in USA, some states have legalized cannabis and marijuana, and some other states refuse. So, in the future, companies who are here may flourish one day and they will become very, very good. For example, in some states, the cannabis companies, they are flourishing. Flourishing, it means they become bigger and bigger and bigger. And understand that here in America, big companies in America, they spend a portion of their money in cannabis and the other stuff because they use it in industry, they use it in medicine, they use it in other things. It's not just weed to smoke. Okay? So I understand that they use it in medicine, they use it in other stuff. So it's not all bad. Now, if you are going to buy cannabis companies, weed, you should follow these stocks and put money when they are young. Because when they become big and the people hear about them, you will be late. So I will just show you 3 ETFs. Now you can search by yourself for stocks, but for me, I just show you. We have done this before. So we have the MJ ETFMG Alternative Invest Harvest ETF. Now, this is an ETF following, okay, and you see they're going up and down, up and down, up and down, like any other stock. We have, if you are interested, you should go to this MJ ETF MG Alternative Harvest ETF, and you see what are the stocks that are in and what it follows. Now, if you want to another one, Advisor Shares Vice ETF. This is in America. It has companies. This is an ETF. It has companies of cannabis. Okay, and last year it was going down too much, and then they go up again, according to the market, from 26 December, as I told you. This, they follow the market. And they have CGC, Canopy Growth Corporation. This is a company. Okay? And here, see here. It was $5, $4. $4 when it was going up until $35. Now, this part here, the people, they don't know about cannabis and marijuana. They don't know about this company. But it was growing. Those people who bought earlier, they make a lot of money. Now it is $44. So no one knows where it goes. It can become bigger and bigger, or it becomes smaller and smaller. It depends on the market. So if you put, for example, in the chart, cannabis, okay? Now, put cannabis like this. Now, do you see all these ETFs and companies? Some are from Canada, some I don't know from where. So, you should just check all these. Okay? And you can put them into a portfolio and search which one is good and you can buy it. There are a lot. Okay? Let's see this. So this, it is just begin with $1.71. it goes to $3.50, and now it's $1.49. So it's not that big deal. So you can search and put, let's see, this Aurora. It goes up good, it goes down, goes down, goes up. It's now $8.31. Now, if you follow my strategies, you can see when there is a big deal. So these companies begin in May 31, 2017. It means 2 years. It was at, listen here, it was at $1.49. It goes to $12. Okay? In 6 months. In 6 months, from $1 something to $12. You see that? So this is the momentum. When the people, they hear, they begin to buy so quick. And afterwards it goes down, then it goes up, it goes according to the momentum. So if you are interested, you can Google, or you can use the chart. I don't know if there is marijuana like written. Oh, there is no. Ah, yes. So if you use marijuana, you find Canadian companies, a lot of Canadian companies. You find American companies, MCOA, Marijuana Company of America. Let's click on it. Okay? It goes to, it was 6 cents or 7 cents. Now it is 1 cent. So it goes up, it goes down. But it looks a very, very small company. That's why I told you, you should at least think, you should think about bigger companies that can stay. Here in USA, most of the drugstores are interested in marijuana and cannabis. And they spend portion of their money to invest in these small companies. Okay? So maybe if America makes marijuana and cannabis legalized in all states, there will be a boom of these companies. Okay? But who knows? No one knows. So when you say, Fida Hashim said, is weed still hot buy or not? Understand that when companies, they come to the stock market as an IPO, if there is a momentum, there is a boom, people talk too much about this company and it's good, a lot of people, they buy in few months and you can make a lot of money. But don't expect something that will be very, very big, and that is the one, so no one knows. So you should follow. So Wiseman said, Kareem, it's good you don't own Rite Aid stock. No, I didn't buy it. Now I intend to buy it when I see the stock at that time. In terms of chart, I like it. It was going down, it stops, it's going up, and I say it might be having a big trend and I make a lot of money, and I continue to invest in it because it's a good company. But when I search just a little bit, I find debt. When I find debt, it's over. And then after 1 month, 2 months, I see the stock having new lows. I understand that it is over. And now, I think it is sold to World Green, because I see one Rite Aid near us. It's a new store. Always it is put Rite Aid. It's good. And that's why I ask myself why they are making stores where they are losing money. It means they have more loans, and they make new stores thinking they can make money from other locations. But the problem is that loans were so bad. And the interest rate, you should never, never, never make an investment with an interest rate, with a margin account. No one will do that, because interest rate is taking money from you. What if you lose money? You lose more money. Okay? So this is the bad thing. But if you use day trading, it's okay. Because in day trading, they will not count the margin, except when you hold at night. Okay? So that's the thing. So Wiseman said, I heard 9 out of 10 businesses fail. No, listen. When they say 9 business out of 10, it is just mechanical. Now, what does it mean mechanical? You right now, you go online and you make a company, you give it name, you pay $50 or $60, and you put an address for your location. That is a business. Now, and then you change your mind. You don't pay each year. You pay fees because you have your own company, and you shouldn't pay. So you go to your company and you delete your account. It means you don't have a company. So this, they say the company or the business failed. No. Some people, they don't even begin and they close their accounts. So this is counted as a business and it failed. That's why you see a lot. People, they don't know. People, they are not prepared to do a business because they don't know the business well. And some, they throw a lot of money into a business, but they don't know how to run it. They don't know competition. They don't know anything. They just have an idea. He sees his friend has a restaurant. Oh, okay. Why not me? Why not me? I should make a restaurant like him and make money. But when he opened a restaurant, he doesn't know nothing about management, where to buy, where to sell. He doesn't know nothing, and he put his location in a bad location, and then he doesn't make money, and then he lose money. Okay? So this is the kind of things I'm speaking about. And most of the businesses lose their money from the first year to the 5 year. If a company stays more than 5 years, 10 years, 20 years, it means that it is making money and it stays. Because no one will pay without getting money. Because you will pay fees, you will pay this and that, you will pay workers, you pay a lot of stuff. You need loans because you need money, more money to make more things. And then you don't have money as profits, so you should shut down your business. Okay, so that is the deal. Wiseman said, thank you, Kareem. When you explain something, it makes sense. No, listen, I'm trying just to give you the general thing about businesses and how they run, and why the people succeed, why the people lose business, and it's just like what did happen in 2008. Things were booming. In 2007, we have the peak of housing. Anyone who needs money, they give him money. The banks were so, I'm not saying so stupid, but banks they give money to anyone. Even those people who have small jobs, they don't have money, they give him big loans. And when the market collapsed, everything collapsed. Millions of people lost their homes because they can't pay. And even the banks, they lose money because when they want to sell, they need to sell very, very quick. They put it in the market, there is a pressure, and the housing system falls down. And people lose their jobs. Real estate agents, they lose their jobs. They were finding other jobs because there is no sale. And this is what happened in the market in 2008. Okay? So everything is related to each other. Now, Ugandan Knuckles have a question. Thank you very much, Uganda Knuckles, for your questions, and everybody here. So Uganda Knuckles says, hello Karim. When I search for earning dates, different sites shows different earnings dates. What is the best place to check earning date? It's a bank site like TD, CIBC, or Yahoo Financing. Most of the time, go to NASDAQ. Go to NASDAQ, it means the exchange, and put the name of the company and then check. Most of the time, the company itself, it announces. You can even go to the website of the company. You can even call the company if you don't know exactly. Any site for Canadian stock earnings? Yeah, you should see the exchange where the stock is. Canadian exchange. You can call the company. There is a investor site. Always you find it in businesses. It's called investors. There is an investor corner in each website, a big company. You enter to investors section. You find information about the earnings, about what they make, about the prospectus, about everything. And you find a number and you can call them. Okay? Call them and ask them. Because this is an announcement. It's an announcement done by the company. The company said when the announce will be. And you should see the analysts what they say about the earnings, which is called EPS, earning per share. Okay? For us here, it's not any site that you should go, because some sites, they can give you information that it is false, because it's a guy who collects information and puts them in his website or whatever. So Yahoo, yes, Yahoo is a good website for IPOs calendar, for earnings, for a lot of stuff. And sometimes just Google it. If it is the company, it should be true. Okay. So guys, it is 1 hour 52 minutes, 53 minutes. We have 7 minutes left. So please, guys, thank you very much, Ugandan Knuckles. And Ugandan Knuckles, Canada has legalized cannabis and marijuana. So all the companies should flourish. It means almost all the companies that they go, if they are good, you can make a lot of money from them. That's the good thing. But in America, it's still a threat, because some states until now they don't approve. In some states here, America, people are smoking in the street or smoking near the policeman, so it's their right because it's legalized. And some people, they grow marijuana in their houses and they sell them. It's everything legalized there. But in other states, if people, they grow in their house, even if you grow a little bit into an apartment, if they discover you will get problems with the police. Okay, so as I told you, Ugandan Knuckles, try to check big companies. They always have investor sector. If you have 2 or 3 companies that you are interested to see, you can just call them. Call the investor sector and ask about. They should put this information in their website. And the exchange, he should give information, because the exchange should give all the information about the company. You find filings, you find everything that the company has said in the website. And there are people who are working on these things every time. Okay? So to end this session, as I told you before, the market is into a correction. This week it stabilized a little bit, but we will see next week if it continues to collapse and crosses the support line and makes a new low. It might that we have a downtrend and it can continue in this summer, or it can go up again and become a very good trend, and we cross the height of last year, and then we make a new big trend again. So it depends. So 5 months were good. We are waiting for the other months for summer and winter. We try to see what the market will be doing for us. But understand, as I told you before, there are some stocks that are going up, especially IPOs and penny stocks and other kind of stocks. It depends on the sectors. Try to check the sectors, which sector is on green. Don't check the day, because the day is misleading. If today, for example, all the market is good, it doesn't mean that in 1 week the market is good. It was bad. Okay? So try to see the big picture always. The chart. Try to see the daily chart and try to see what's going on during these weeks or months. Don't see only 1 day or 2 or 3, because you will never know where is the trend. And you can't make decisions on 1 day or 2 or 3. You should see everything, chart, in order to make a decision. Okay? So, guys, if you have one more question, we have only 3 minutes left. Wiseman said, if you type out both the stock name and the earning dates in a search, it should show up in a search easily. Okay. Now, for me, I bought the ticker. It means the symbol of the company, and I put earning dates, and most of the time, websites, they show the earning dates. But earning dates is a dangerous thing. So understand that you might have a gap up, you might have a gap down, or the stock might do nothing. So be careful and not buy before the earning, thinking that there is a gap up because someone tells you it is good to buy now. Try to make sure not to buy because of the news. The news are very dangerous. It could be good, could be bad. And no one will tell you that it is a sure thing. Okay? There is no guarantee whatsoever in this earning news. So, Wiseman said, thank you, Kareem, and everybody have a good weekend. Thank you very much, guys. Always, guys, try to follow me on YouTube. I make videos. I give sometimes some crucial information during the week. Try to watch my videos and send me emails or comment, and I will write back when it is time. Okay? And as I told you, not everything in the market is down. There are some stocks which are good, and just search and always search. Use my techniques for scanning for stocks, which is trading level 2. Always it gives you an idea where are the good stocks, and you just try. You put stop loss, you buy, you put stop loss. If things go well, you will be making money. If things go bad, you just lose little money, which is part of the game, and that's it. If you are looking to buy and not to lose money, and it is a sure thing, you are misled in the stock market, and you will never understand how it works. That's why some people they want lottery tickets better, because at least he knows that he is losing all his money, and he tries always. He tries 1 year, 2 years, 10 years, 20 years, 100 years. And there are some who have been doing this for all their life and they don't succeed. Okay, and some they are lucky, they do only once and they succeed. Okay, so it's part of the game. So thank you very much, guys, and see you next week, and watch my video.